Hi. Let's learn about liabilities. A liability is something that a person or company owes, usually a sum of money. They are settled through the transfer of economic benefits like money, goods, or services. Liabilities are listed on the right side of a balance sheet and include items like loans, accounts payable, mortgages, deferred revenues, bonds, warranties, and accrued expenses. Liabilities are obligations between parties, typically not yet completed or paid for. They are categorized as current or non-current depending on whether they are expected to be concluded in 12 months or less. Liabilities are a vital aspect of a company used to finance operations, pay for large expansions, and make transactions between businesses more efficient. Liability refers to the state of being responsible for something, and can also refer to any money or service owed to another party. Tax liability, for example, includes property taxes and income tax owed. Liability can also refer to potential damages in a civil lawsuit. Liabilities are sorted into two categories, current and long-term. Current liabilities are payable within 1 year, like payroll expenses, accounts payable, and monthly utilities. Long-term liabilities are debts payable over a longer period, such as long-term debt, rent, deferred taxes, payroll, and pension obligations. Liabilities refer to things that you owe or have borrowed, while assets are things that you own or are owed. If you subtract liabilities from assets, the difference is the owner's or stockholder's equity. Expenses are the costs of operations incurred to generate revenue, while liabilities are the obligations and debts a company owes. Expenses are listed on a company's income statement, while liabilities are listed on the balance sheet. For a practical example, let's look at AT&T's 2020 balance sheet. Current liabilities consist of bank debt maturing in less than 1 year, which is often used for day-to-day operations. Long-term liabilities, like long-term debt and accounts payable, are also listed. A liability is something that is borrowed from, owed to, or obligated to someone else. It can be a real obligation, like a bill that needs to be paid, or a potential one, like a possible lawsuit. Current liabilities are due within a year and are often paid for using current assets, while non-current liabilities are due in more than 1 year and include debt repayments and deferred payments. The accounting equation states that assets equals liabilities plus equity, so the value of a firm's total liabilities will equal the difference between the values of total assets and shareholders' equity. A contingent liability is an obligation that might have to be paid in the future, but there are still unresolved matters that make it only a possibility and not a certainty. This includes lawsuits, unused gift cards, product warranties, and recalls. An individual's or household's net worth is taken by balancing assets against liabilities. Liabilities can include taxes due, bills that must be paid, rent or mortgage payments, loan interest and principal due, and prepaid work owed. Here are 4 key takeaways. 1. A liability, generally speaking, is something that is owed to somebody else. 2. Liability can also mean a legal or regulatory risk or obligation. 3. Current liabilities are a company's short-term financial obligations that are due within a year or a normal operating cycle, e.g. accounts payable. 4. Long-term, non-current, liabilities are obligations listed on the balance sheet not due for more than a year. Hope this would help. Thanks for watching.